very good evening to all. Let me extend a warm welcome to all of you. I would like to invite Sanil sir for their welcome address, and it's the official start for the webinar. Over to you, Sanil sir.
Hi, Umang. Hi. Good afternoon, ladies and gentlemen, esteemed clients, MCX team, Mr. Rishi Nadani and Mr. NK Mustafa. My dear colleagues, thank you for standing by and welcome to the investors meet. As you know, Geojit consistently aims to give our clients the best service possible. Additionally, we always, to stay in touch with our clients to discuss the markets and prospects for all types of products lines. A part of this endeavor is this webcast. I would like to welcome everyone to this webinar on behalf of Geojit. Welcome all of you. We are here today to talk about the outlook, insights, and opportunities in the commodities market. The existence of a strong commodities derivatives trading platform in India that is governed by the SEBI is due to the significant signs that commodity markets play in every economy. Let me extend a warm welcome greeting to all our esteemed clients who joined in this webinar. Also welcome Mr. Rishi Nathani and Mr. NK Mustafa from MCX and my colleagues from Geojit. I'm so happy to welcome Mr. Rishi Nadani at MCX. Mr. Rishi Nadani oversees business development and marketing. He has held CXO level positions at numerous financial services firms and exchanges before joining MCX. And you all know that he's a very enthusiastic writer and speaker, and his essays on money and markets frequently appear in different media and all outcomes. Welcome, Mr. Rishi Nadani to this investors meet. Welcome, sir.
Thank you.
We have Mr. NK Mustafa. He has more than 19 to 20 years, 2 decades of experience in the input and output market for commodities. Presently working with MCX as the South Head of Business Development in Bangalore. Sir, I welcome to this webinar.
Thank you.
And also we have Mr. Harish, our Head of Commodity Research, and Mr. Umang, the Head of Commodities. And my state heads and commodity heads also joined in this forum. Once again, I welcome our esteemed clients and all our colleagues and head of MCX to this forum. And we are sure with the decades of experience that Mr. Rishi Nadani, Mr. Mustafa, and Mr. Harish of Geojit are going to deliver us some valuable information regarding the present market scenario and the opportunities that we can leverage out of it. Thank you for joining to this investors meet. Now I welcome Mr. Rishi Nadani to address us. Sir, over to you. You may please.
Thank you, Mr. Sunil. Thanks, Umang. Thank you, Geojit, for having us here. It's indeed a pleasure to be with all of you. Commodity markets today are at a very interesting juncture, where you are finding that, with all the global uncertainty which is increasing by the day, the requirements for having an exposure to commodities, not only having an exposure to commodities, if you don't have, but if you have, then having the hedge against that exposure is also necessary. So both ends are necessary to cover both ends. Why the first end is necessary is that if you don't have an exposure to commodities, why is it necessary to have an exposure? Let me give you a few reasons. One is that, commodities will always try to cover inflation. So whenever you find high inflation, and if you have an exposure or investment in commodities, then it will help you to mitigate the effects of inflation on your portfolio. So you should always have some part of your portfolio dedicated to commodities, because then only your commodities will be safeguarded against inflation to the extent of your exposure to commodities. Second part is you've seen recently the rupee has fallen from around 75, 76 to around 80. Now, again, if you see the international price of commodities may not have changed, but the domestic price of commodity would have increased because internationally referenced commodities will always give you an inbuilt forex hedge. So if you want to your money and your to stay at par with international currencies, it would always make sense to also invest in internationally referenced commodities, because then what will happen is that you will also get an inbuilt currency hedge. So that again will help you. Thirdly, is that commodities are the basis of economic activity. So if you feel that going forward, India will become a 5 trillion economy, India will grow further, then commodities will have to be a part of it. So anyways you look at it, commodities will always help you. And another thing is that commodities over the long run are counter cyclical to equities and bonds. So in the long run, they will provide a very good counterbalance to your portfolio. Like in a ship, you have ballast, which uses to weigh down the ship. Similarly, in a portfolio also you have commodities also, which will act counter-cyclically to equities and bonds. So these are the ways where you need to make sure that there is a commodity exposure to your portfolio. Now within MCX, we have always kept adding more and more commodities to our portfolio and more products and participants. So the recent addition in participants has been that FPIs have also been allowed to participate in commodities, and we are awaiting the final detailed guidelines from SEBI, post which we will see that FPIs hopefully will also come in. And that will help commodities because it will add liquidity and depth to our markets. It will make our markets more robust and ensure that international participation also comes to commodities. In terms of products, you have seen a lot of products. First, we only had futures, then we had options, then we had index futures, and recently we launched a gold mini options also. You should seriously look at the gold mini options because we are having pretty decent volumes that they're picking up. So instead of the 1 kg, which is a bi-monthly contract, the gold mini option is a monthly contract, 100 grams. So the premium is only 5%, or roughly 5% of the premium of the larger contract. So it is very affordable for people to trade in the gold mini options. Overall, if you see, and we also have silver mini options, which is again a very good product for people to look at. So overall, if you see that, we have seen a growing interest in options. So in FY 2021, we had a single day average turnover, single side average turnover of every day of around 900 crores. In FY 21-22, this became 8,000, around 8,000 crores. In FY 22-23, current year, this is more than 22,000 crores. So you've seen the kind of growth we are seeing, and options to an extent, if used properly, will always help you, because apart from the premium paid, there's no downside for it for you. So you can approach the markets with less risk. So of course, again, whenever I say that you should look at the markets, you should always look with proper knowledge and with proper understanding, and do your proper research before approaching these markets. So at MCX, we have seen that we are growing from strength to strength, both in terms of volumes, in terms of participation, in terms of new products and participants. Going forward, we hope to launch various new products like aluminum alloys, steel TMT bars, and SEBI has come out with the guidelines for options on index futures. So we're working on that also, electricity futures. So there are a host of products which we will come out as we go along. We request you to, wholeheartedly participate in the markets. And of course, as I said, with the caveat that whenever you participate in the markets, do so with proper knowledge and research. So that is from my side. One more thing I'd like to add: a lot of deliveries happening on the base metal side also. In the last, ever since the base metal contracts became deliverable, we have delivered more than 235,000 tons of base metals on our platform. So it is also acting as a wonderful platform for deliveries. Another thing I would like to add for gold also: now we have doorstep delivery facility for gold contracts. So any client sitting anywhere in any corner of the country can now get gold doorstep delivery of their gold. So if you buy the gold, you can get at an additional cost, of course, you can get the gold delivered right to your doorstep. So this is another big facility we have made for our participants, so that our members and their clients can now take gold delivery. So you can start an SIP in gold, you can take demat delivery, or you can take physical delivery. 1 gram, 8 gram, 100 gram, 1 kg. We have all four contracts. And in the smaller contracts, if you start an SIP, I'm sure that you can collect in demat, and once you have a substantial size, and if you have a need for physical delivery, you can take that also. So we are trying to bring more and more facilities, and I think gold delivery at doorstep is a revolutionary move in order to help you achieve that. Also, we started FTWs, at Free Trade Warehousing Zone. We've opened warehouse there, so anyone can bring in import base metals and pledge it and get margin benefit without bringing it into the country. And only when you're sure you want to deliver, you bring it into the country, and after paying the import duties. So there are so many facilities. We are trying to facilitate trade and investment into commodities, and these are few of the steps which recently we have taken to further enhance them. So that's all from my side. Back to you.
Yeah,
Thank you so much, Rushinatani. Now over to Mustafa. Please take it over from here, please.
yeah. Thank you, Sunil sir. Thank you, Rishi sir, for joining us and giving us a wonderful talk on the outsides of what do you think the commodities market would be. Ladies and gentlemen, I think Mr. Nathani is I mean, broadly covered most of the things which the basic difference between futures and options. What is the advantage? What is the disadvantage? See, right now, I'm 17 years old with MCX. We had only only one instrument. We didn't have any counter instrument as such. But in the stock markets, I mean, stock markets were already matured, and you had futures contracts, you had option contracts. So always there was a hedge which was available for you. Okay. So here, with the introduction of options in 2017, now of course it took time, almost around 1.5 years, or maybe 2 years for crude oil options to basically take over, and we had gold options, silver options, but there was one issue wherein the option contract was based on a bi-monthly contract. It was directly related to CME, and slowly only hedges started getting into this kind of platform, right? Now we have a situation for example, the kind of geopolitical situations whatever we are facing now, where the world is so uncertain, you will not know what is going to happen. For example, if you just think around like 6 to 8 months back, we never knew that there's going to be a war between Russia and Ukraine, right? So if you had only one instrument like the crude oil futures contract, if you were not very sure, and if the markets were very very uncertain, what would you do? Your positions are naked. See, I mean, you tell me what you can do with futures. You pay margins, fine. Okay, margins are very high. If you want to trade one lot of gold, it is almost around 5 lakhs or 4.5 lakhs. Silver is around 3 lakhs. Like a retail investor, how will you get this money out? So now, in order to counter this, we have a wonderful instrument, which are options, because you have an option. An option is an option. It is the option of the buyer or the seller. I think you understand options, right? I was told that all of you understand the basics of options, so I'm not going there, right? So, as Mr. Nathani pointed out, even with very very less, amount of money, even like 5% of the of the regular premium what you pay for the gold contract, you pay for the gold mini. These are monthly contracts. They're wonderful opportunities. And one more thing, I think Geojit and their customers, I think they have a lot of clients based out of Kerala. There are a lot of jewelers. Jewelers can make use of this opportunity like no other opportunity for them. Like they can start SIPs. They can start these. They can start these gold schemes wherein they come out with a scheme saying that we will fix the price price of gold, and if they have to deliver that gold after 1 month at that fixed price, what would the jeweler do? Because even the jeweler doesn't know where the price of gold is after 1 month, right? He can use options in order to ensure that he doesn't undergo a loss by locking in a price. Okay, so there are wonderful contracts of options. If you just remember what Mr. Nathani told, the kind of turnovers whatever we have registered, I mean right from 900 crores to 8,000 crores, and now we are on par. Almost sometimes we even I mean our options volumes are more than the futures volumes at all. So there are wonderful opportunities. Okay, and see, in fact, I'm sitting in the car because I mean I was just out on a meeting, and if you have any more doubts on options or anything that we have to do, or if you think that in your particular regions, wherever the regional heads are there, wherever the branch managers are there, maybe it is in Delhi, maybe it is in Ahmedabad, maybe it is in Cochin, maybe it is in Bangalore. We are always there with you. Please take us, please make use of us. If you think that you are not able to convince them, we have Biju there in Kerala. No, he's got a lot of people on the options platform. He's got a lot of jewelers to hedge and to ensure that whatever schemes they're running, they're safe for the jewelers. Okay, so with this, we have Mr. Harish, who would basically talk about like the kind of strategies what you can use by using futures, as well as what is the kind of the option contracts you have to be using in order to protect your positions in the future. Over to you, Mr. Harish.
Hello, Umang.
Yeah, Harish, please go ahead. I can hear you.
Yeah, I hope it is audible right now.
Yeah,
Yes.
Yeah,
fine.
very good evening to all of you. Actually, we had a wonderful session about options from the MCX experts. And actually, my role for the day is to give you an insights on commodity markets. Actually, what happened in the commodity markets for the last few years, and what would be the expectation, especially in terms of bullion, energy, and base metals. So I'm sharing with you a PPT. Just a second. See, the commodity volatility is not been started for the last 1 or 2 days or last 1 or 2 months. It exactly started since the COVID-19 pandemic. You know, during up to the first quarter of 2020, markets were almost steady. But as and when the COVID pandemic triggers in the market, most of all the economy as well as commodities were traded down. So on a broad basis, 2020 was exactly down for the commodity side. But once the central banks has taken severe measures to support their economy, especially from the US Federal Reserve, and most of all the global central banks has taken some measures. That measures includes reducing of interest rate and pumping billions of fund into the market, etc., etc. That exactly supported the global economy in the year 2021. So overall, uh, commodities were on the positive side throughout the 2021 period. And we all know that the Ukraine-Russia issue started by the end of March 2022, and there was a recession fears. And broadly, commodities and currencies were choppy during the first and second quarter of 2022. On the commodity side, you know, the precious metals exactly rose based on the safe haven appeal. Likewise, natural gas price spiked to its all-time high, and also the crude oil prices that went up to $130 in the international market, and the base metal prices rose abruptly. And after the second quarter, by the second quarter, it is starting correcting. And also the agri commodity, most of the agri commodities were traded volatile on expectation of availability. So moving to
Sorry
next
to
slide.
Harish,
Hello? Yeah.
slides are not changing. We are on the first slide itself. Can you once check? Now it is on the 2020
Yeah.
slide. Precious metal. Okay.
Okay. Okay, I hope you are all gone through the first slide, and I'm moving towards the second slide.
Yes.
See, some of the key events we have to discuss for the last few years is, Indian rupee went to its all-time low level of $80 mark. That actually happened in this during this month only. Since India is many of the commodities are importing, the landed cost.
Harish,
Yeah,
sorry to interfere.
yeah.
The slide, it is not moving, Harish. It's the same slide here. That's the first slide,
So,
commodities result outlook.
okay,
One second.
my side, yeah.
Now it
Is
is
it changed?
correct now.
Okay.
Now it's moved to the introduction slide.
Okay. So I think you had already gone through the introduction, and we can just move towards the next slide.
Yeah,
See, we all know that the Indian rupee hit a all-time low of 80. Since India is importing most of the commodities, especially gold, etc., the landed cost of landed cost.
Harish, we are facing the issue because the slide you are changing is not getting synced. One second. Uh, uh, Jyoti, can you help us in this? We are struggling.
Umang, now it is the key point slide. I think that is the slide which he is talking about.
But
Yes.
it is not changing to all the viewers, sir. Even to me also. It is, I think some sync issue is there.
Okay.
Key point. Anyhow, if anyone please facing the issue, there may be a little bit a column sync to presenter. Just click on that. It will be update to the key point. Okay, please go ahead, please.
Yeah, I hope slide number 3 is with you. See, one important factor I already discussed that the Indian rupee fell to $80 mark in the this last week. So since India is importing all the commodities, many of the commodities into the country, the landed cost of the commodities are on the higher side, especially gold, etc. At the same time, the dollar index, US dollar index hit a 20-year high, and the Fed is compelled to change their policy. That is also influencing the commodity market. US Federal Reserve increased their interest rate by 1.75 basis points in the last quarter. And likewise, Fed also hinted that more interest rate is in the cards in the coming days. Like the Federal Reserve, central banks from European Central Bank, Bank of England, and also Reserve Bank of India, all these key banks already lifted their interest rate due to the recession concern. One another important event what we had seen in the few days that the US inflation. Actually, the targeted inflation of the US central bank is 2%. But as per the latest report, it is almost 9.5%. That is the main reason why US central bank is continuously raising their interest rate. And we can expect more interest rate hike in the coming days. So that definitely have an impact on various commodities that we can discuss later. And at the same time, Eurozone inflation is also on the higher side. And along with, we have to read that, the World Bank lowered the growth rate of the global economy by 2.9%. See, it was almost 4.5% in January. So there was a drastic decline in their expectation of the global economic growth. Likewise, the International Monetary Fund, they are also projecting a lower rate of growth during this period, during this year. So I'm moving to next slide.
Yeah, it's working fine. I think it's
Yeah.
changed.
Okay. See, I already discussed about the rupee factor, rupee influencing the domestically traded commodities. And, Indian gold in the initial, in the first quarter, that means by the end of March, etc., Indian domestic gold prices hit almost 56,000 in the MCX platform. Likewise, it went to almost $70 in the international market. That was due to the uncertainty between Russia and Ukraine. At the same time, the silver prices declined. Actually, silver is now the fundamentals are changing of silver. We can discuss it later. Silver is declined by 11%. These are all particular to the MCX platform. And the crude prices, because of the Russian tension, it went up to 42%. And in case of natural gas, it was a whopping 122% rise in the MCX platform. Likewise, it was in the international, that means the NYMEX platform also. It went to almost a multi-year highs. As in case of base metals, in the first quarter, we saw a huge rally, especially in copper, etc., copper and aluminum. But followed by the US Ukraine-Russia tension, it started correcting. Copper so far this year fell by 16%, aluminum declined 7%, and in case of zinc and lead fell by 3.5 and 6.4% respectively. Now, in moving towards the next slide, see, this is exactly what I would like to give you the review and outlook of gold. Actually, we had already discussed that there is a lot of opportunity in gold, especially trading through MCX and also other platforms. So we have to understand what exactly happening in gold. The fundamental analysis would be very important for a proper investment in gold. First of all, usually the gold prices are fluctuating or increasing because of its safe haven appeal. So if there is any uncertainty in the economy, that means geopolitical uncertainty or any other kind of tension, war, or financial crisis, etc., people are willing to invest in gold. They believe that other investments are risky, so that they are moving towards gold. So that is usually happening in the bullion investment. As you can know, in the last year, means 2020, when global economy is crashed, gold prices hit a new high. Likewise, this year also, when Russian-Ukraine tension came into the market, the prices went up to new highs. So that is one key factor you have to keep in mind. That is safe haven appeal of gold is very important. And at the same time, if there is any recession concern, there are a lot of uncertainty over the global economy still there. So that is supportive for gold on a broader basis. And at the same time, one of the very important factor we have to analyze that there is a worries of stagflation. That recently the World Bank announced that there is a concern over stagflation in the economy. So usually stagflation is not happened in many of the important countries, but if it is happening, uh, it is expected that gold might be a good investment. So stagflation is a situation, rising inflation continuously, but there is no growth in employment and manufacturing. So that is a kind of economic situation. So usually that may support gold prices. So that means if any uncertainty in the global economy or any other geopolitical tension, gold will be the wonderful asset and people moving towards investing in gold. So now I am moving to the next slide. This is exactly what happening in the international gold, that is the London spot gold. I think you can go through this chart. There are several positive factors usually supportive for the international gold. That is, the geopolitical tension that I already discussed. Likewise, the negative factors, I can tell you that if the dollar is strong, that is a negative factor for gold. Likewise, any interest rate hike, as what we had seen for the last few quarters, every central banks are started increasing their rates. So usually, as and when the central banks are hiking their rate, people willing to invest in bank investment. So they usually withdraw money from the gold and they're investing in more interest yielding assets that like bank deposit, bonds, etc. And also, if the economy is very strong, that is a negative impact for gold. As you know that during 2021, most of the global economy on the positive side. economy in the sense equity market, all the markets were on the positive side. At that time, exactly, gold had a weaker time. So next slide may be a very interesting one. That is, you can see, this is the chart of Indian gold. If you compare with the international gold, we can see a lot of choppiness. Market went up to new high, then came down, and again moved up and again. So that kind of volatility had seen in the international market. But you can see the Indian gold since the start of 2002 onwards, it is continuously rising. Okay, so far now it is more than 770% of high in the gold prices. Recently, the tension between Russia and Ukraine took prices above 50, nearby 56,000 in the MCX platform. So throughout this period, what exactly supported for the gold is, apart from the international reasons, one is the weak dollar. Sorry, Indian currency, weak currency. It was Indian currency was about 65 to 63 levels in 2016 2017 period. From that, it came down to 80 and against dollar. So that increasing the landed cost of gold. That is the one reason why Indian gold is on the higher side as compared to the international market. And second, as and when economy is facing some trouble, especially our current account deficit is narrowing, government takes some measures. So that is increasing the import duty, custom duty, etc., etc. So recently, government increased the custom duty of gold from 7.5% to 12.5%. That exactly supported for the Indian prices. So that at the time, international prices may held almost steady, but the Indian prices continue rallies. And the third fact, as you all know, India is one of the very important consumer of gold. It is the number two consumer. So our demand is on a persistent manner. Okay, in some other countries, maybe during some occasion or during some investment crisis, etc., etc. Then, but in case of India, the demand is on a persistent manner. Every time there is a particular demand, seasonal demand, the wedding-based demand, then investment-based demand, then it is used as a gift. So some festive demand, etc., etc. So it's almost throughout the year there is a season for gold. So that is the one reason why Indian gold is also on the positive side. Positive side means that it's continuously rallying. Okay, so while analyzing this chart, we can understand that the gold investment is a very profitable one for the last many years. But it should be on a longer basis, not very short or even medium may not be a good. But if you are able to hold gold for a longer period, that means 3+ years, definitely gold can generate a good return. And moving to next slide, this is just for your reference. The performance of Indian currency. I already told you that by 2017, dollar Indian rupee was about 64, 65. From that, it went up to 80. So landed cost of all commodities, not only the gold, crude oil is supported, crude base metals, everything supported. So that this is only for your reference. Indian rupee has weakened very well for the last 2 to 3 years. And this is the slide of dollar index. Actually, dollar index started weakening only after the tension between Russia and Russia and Ukraine. During that time, it was about 1995 level. So when the tension started, people start investing in US dollar. That is one reason. And also the interest rate hike by the US central bank. So both are supportive for US dollar. So as and when a dollar is gaining, that is a negative fact for bullion and other commodities. So that is the inverse relationship between dollar and commodities. See, now I'm moving to the next slide. So this is the short-term forecast of gold. At present, gold is almost steady near 1,700 in the international market. So the important support is seen at 1645, followed by 1350. As we analyze the international prices, there are a lot of potential on the downside, but at the same time, it tested two time. 2070 is the key resistance. 2070 2070 level is the key resistance. Prices tested two times so far, but it can't able to break. That's on the technical basis, it can't break the resistance and came down. The very immediate and medium term or maybe mild negative, because there are a lot of correction is possible. In the Indian prices also more than 50,000 per ton gram. In the international, it is almost 1,700. So there are potential correction in the market on the immediate side. But on a very long-term basis, it is definitely a positive investment that I've already shown you in the chart also, especially in terms of Indian market. The right now, the current negative factors are the strong US dollar, central bank's policy announcement, that is the rate hike, and also lesser physical demand has been reported from many countries. And the positive things, that is the main reason why gold is not liquidating as uh, to a to a particular level, that the Russian tension and also recession fears. These are the two particular things supportive for gold right now. And in the Indian side, 49,600 may be the important support, followed by major level is seen at 44,500. And on the higher side, 53,500 would be the resistance level for MC export. So what we can do is in gold for a long term, yes, of course, we can go for gold. Okay, but it would be better that every dip you can utilize it. As and when any correction in Indian rupee or the correction in the international market, uh, based on there may be some selling pressure we can see in the MCX prices, MCX or the domestic gold prices. So that time you can utilize it perfectly. And over a long period, over a period of 3+ years, there are a lot of chances for the appreciation. And recently, every fund managers are considering gold is a very good portfolio diversifier. So if in your portfolio, many of them are recommending almost 5 to 10% in gold. So you can utilize the various investment avenues in terms of gold, like ETF, any other bond, etc. You can utilize. Now moving towards next slide. See, this is exactly about silver. As we expect, silver is not parallel to gold right now. Earlier, for 4 to 5 years back, silver is exactly replicating the performance of gold. But right now, the scenario has changed. Silver currently considered as a industrial metal. Its safe haven has almost vanished, and people trade this commodity is used only for the purpose of industrial use. So while we analyzing its price performance for the current prices are almost 2-year low, but domestic silver gained almost 19% in the first quarter, but after that it corrected sharply. So on the broad outlook, we are not that much of bullish in silver. Silver prices can rise only if there any considerable change in the global industrial segment. That means if there is any important change in the China economy, if they are pumping more money there to the market, or some that kind of unexpected demand is happening, yes, definitely there could be some positive impact on silver. Otherwise, silver prices may be choppy, and very long term also it may be choppy with a very tight range. And historically also silver is very volatile, very volatile. And 2 year back it came down below $9, and after that it went up to $30, and again now it is nearby $18 in the international market. So corresponding move we had seen in the Indian prices also. But on a broad basis, silver is not parallel to gold right now, and it is not considered as a good investment as in the international side. Many of them are considering it is as a industrial metal. Now the safe haven appeal moving towards gold. That is historically gold is number one, followed by the US dollar, then US bond market, and also in the last 1 to 2 years, many of them had invested in cryptocurrencies also. So the potential of silver has been replaced with some cryptocurrencies in the last 1 to 2 years. So the scenario is changing. Gold is constant, but the uh, scenario of gold as a safe haven is being changing. And on the support side, the major support of silver in the international market is seen at $8.5. And on the higher side, the resistance is seen at $29. Now I am moving towards next slide. See, this is the volatility of Indian gold. This is MCX chart. The MCX price is highly volatile, based on the current domestic INR value, demand, etc., and also in the international prices is responsible for this huge volatility. And moving to next slide. See, this is also very interesting topic, maybe the energy market. After the Russian invasion on Ukraine, global energy prices rallied. The crude prices, natural gas prices, gold prices, all the sectors of the energy components are extremely volatile with the positive bias. Since you are all aware that Russia is one of the top exporter of crude oil, and they are also one of the uh, top exporter to European countries of natural gas as well as crude oil. So during that period, there was a huge volatility in energy prices. Many countries has put restriction on the Russian products that raised uncertainty over the supply. That was the main reason why prices went up to multi-year high. And likewise, we had to read that the OPEC plus means the top producing countries, along with the Russia, they are not willing to increase their production. They are using the restrictive production policy. That is the one reason why a lot of supplies are not coming to the market. And likewise, the US was the top producer till 2020 year. Then after that, their production is also on the lower side. Otherwise, US can able to manage the global market, but right now it is not happening. That is the one reason why oil prices are still on the positive side. And the inventory levels, especially from the US side, is also deteriorating for the last few months. At the same time, the global demand is almost steady. So these are the prime reason why oil prices are at the multi-year high. But this kind of scenario may not continue for to an extended period because there is a huge pressure on OPEC to produce more. US is also trying to produce more production, more crude oil, and many of the Asian countries, especially India, China, they are still buying from Russia. So these are the scenario which is made global oil prices highly volatile. So once, if you are keen on investing in crude oil, you have to look into two to three parameters. One is the US production, Energy Information Administration level. That is very important. US production and their storage level is very important. Then you also look into the OPEC production policy. So these are the two very, very important component that are likely to influence the global prices. Now I'm moving towards the next slide. See, this is what happened in the crude oil prices. This is the MCX chart. Every rally, there was a corresponding sell-off. By 2008 period, after testing almost 6,700 levels, prices came down to 2,000 barrels in the Indian market. Again, the other several reasons has pushed the prices towards 8,000, and after that it came down again, and also there was a swing again, and again it came down below zero due to some particular reason by after during 2020, and as and when the tensions are again started, Russian tension, the prices went towards 9,996 in the MCX. So oil prices really volatile. So what you can do is you have to understand the fundamentals, especially from the OPEC side, US side, etc. And on the Indian side, you have a track on the Indian rupee that also make volatile prices. And the next slide, this is the outlook of growth. Uh, short to medium term, there may be corrective selling, followed by a consolidation in prices. That would be the expected trading strategy in case of crude oil. The positive factors are current positive factors are uncertain Russian oil. That is one reason, and a steady global demand, and third, weak global inventories, and fourth, the OPEC production policy. They are still continue with their restrictive production policy, and the moderate US production. These are the factors which are supportive for the crude prices at present, and the negative prices in the coming days, maybe possibly in the coming days. That is a likely increase in OPEC production, OPEC and US production. They are both trying to increase their production for the several months, but it is a very elaborate topic, so can't able to explain a lot about the OPEC and US production. At the same time, if the US dollar is again strong, that may be a negative for global commodity prices. And there are still recession fears. These are all the negative aspects are likely to influence oil prices in the coming days. So the major support for international, that is the NYMEX crude oil, is $88, followed by 72. And on the higher side, 123 and 130 levels. At the same time, in the Indian futures market, 7,400 and 6,200 are the supports. And on the resistance side, it may be around 9,200. Okay, likewise, natural gas is also very volatile. It went up to all-time high recently, and we expected that kind of volatility in the coming days. See, you can see the natural gas prices is highly volatile since Russia is one of the top exporter. So that is the one reason. And moving to base metals, all the base metals hit all-time high recently after the Russian tension. Nickel trades were halted. Slowing economic activities in main industry economies currently pressuring the prices. So on the outlook side of base metals, this is just for the reference. The copper went up to all-time high, but it is in the correcting phase. Likewise, zinc and also aluminum, nickel, lead, all are on the corrective selling pressure right now. And on case of the outlook, the medium-term outlook may be mild negative. Because there are chances for correction, especially copper, aluminum, etc. But on a long-term basis, we expect range bound with mild positive. That is the expectation in case of the base metals. The positive side in the coming days, maybe the demand from China, that will be the important one. If you are investing in base metals, you have a look on the China demand. That is very important. And also the inventory levels. At the same time, negative factors are the strong US dollar and recession fears, along with the oversupply. If there is no sufficient demand, there are chances for oversupply that leads to crash in prices. I'm moving towards the next slide. So in case of agriculture commodities, also we had seen a very huge volatility, especially oil complex. There are a lot of news coming out from various production hub like Indonesia, Malaysia, etc., etc. But now the scenario is changing. Now many of the countries have started importing oils, so there is no uncertainty in edible oil complex right now. Prices started reversing. Not only the oil like wheat, etc., etc. Supply is almost higher, and on the Indian term, the Kharif crop so far is very good, and the government expectation is also would be on the positive side. That means that there would be a good acreage during this monsoon. So that may be a supportive factor for the agriculture commodities on a broad basis. See, on the outlook side, initially it may continue positive as long as the Russia-Ukraine uncertainty is going on. But a good monsoon, especially from the Indian side, if a good monsoon are likely to generate a good yield. And now moving to next slide. This is particular to CPO. I had a query on case of CPO, that is why I'm taking care of the CPO prices. You know, I already mentioned that the Indonesian export ban, that was the main reason, but now it is almost recovered from the highest level. It is almost 50% down from its all-time high. So the outlook may be choppy with a mild positive bias. We don't expect a major sell-off or major rally again in CPO prices. That likely to steady with a mild positive bias in the rest of the year. Then the next slide. This is the international crude CPO price. It corrected heavily from its all-time high of 7,400 levels. So these are all from my side. If you have any particular doubts, we can have a discussion once we complete the session. I'm handing over to Sanil sir again.
Umang, can we open for Q&A session? If there is any question, let us
Yes,
take it now.
Yes, sir. Dear
Thank you,
participants,
Harish.
thank you, Harish, for the wonderful presentation. And now we are going to open the question answer session. Dear participant, if you are having any question, please raise your hand or raise your query in the chat box. Okay, we have a query from the Anthony, Mr. Benhan Anthony. Can we Jyoti, can we allow them to their audio, please? Okay. He said, fine.
Well, he said that the query has been answered in the PPT, so we can probably move to the next one.
Okay. Can we go for the next one? Can you allow the audio to the next participant, please? He's on the first question. Yeah, please go ahead with your question, please. Okay, Harish, there we have a question in the chat box. Recently, there was a proposal to start NSC Gold Exchange by NSC. Any update on that?
See, as far as my understanding, the process is almost completed and they have already started something like that. I read it somewhere else. I think the MCX experts may be good to give a proper reply in this regard.
Anjan, do you have any feedback for the Gold Spot Exchange? The participant, please raise your query in the chat box. We will definitely try to address all your queries.
As of
Anjan, please.
no, as of now, no. So it is a two. As sir said.
So it is under process, and as soon as we will get some further news over that, we will definitely like to share you. Okay, thank you, Anjan. As we have a query in the chat box, how can we find exactly to market is down or up movement for trading in silver and option trading? It's very tough to answer, but Harish, would you like to add some comments?
See, in case of silver, I already mentioned that silver is extremely volatile commodity. But what you can do at present is you can track the international market rather than the Indian prices. Okay, so you can find out the maximum best support and resistance levels in the international market. It is available anywhere. I think TradingView. There are a lot of other sites are available with the international gold and silver that is almost free. So you can just take any of this chart and use some simple trend line, etc., so that you can get international support. And that price you can just convert to Indian prices. That would be ideal. On a broad basis, you could get the resistance and support levels. Okay. And in case of option trading, it is very complicated. Sure, it is not able to explain only one or two sentences. It may there are a lot of several other factors also we have to consider.
Thank you, Harish. Next question is how we can use gold as doorstep. Other than the delivery part, the exchange has started tie up with the logistic. And when you are purchasing the gold, if you are willing to get the gold at your doorstep, you have to pay the fee for the logistic, and the same will be delivered at your doorstep. How is silver industry metal? Harish, what do you?
See, silver is currently using for a lot of other areas apart from the investment side. For electric car manufacturing, some photography related things, some dental industry. There are a lot of several new industries are using the silver. So that is the one reason I already mentioned you. If any prospect in the China economic growth or Chinese manufacturing, China is one of the top consumer of silver, especially for the uh, electric vehicle. Okay, so that is the current demand for silver in the globally. Rather than as an investment asset, it is considered as an industrial metal.
Thank you, Harish. Uh, Thank you to, I would like to present my thanks to all of the participants. I would like to thank Mr. Rishiji, Mutappaji, Anjan, Biju, and our team at the head office who organize all these events. I would like to thank Sanil sir for their valuable addition to the meeting and their comment. Thank you, Harish, for the wonderful presentation here. And we are here for helping you. If I would like to thank all the participants and invite you that if you are having any other question, please approach our branches. We will definitely happy to help you in all the manners. Please opt for our research services. We are doing very good in the research, and definitely you will get benefited of. Once again, I will like to thank all of you for the your patient listening, and we will definitely continue such type of sessions in the future soon. Thank you all. Sir, you are to add.
Thank you.
Thank you.
And let us conclude this con call. And once again, thanks to all our clients also joined in this conference. And we would like to have this conference and investors meet once in a month. We once again thank you for all joining. Thank you, Harish, and thank you, Rashid Nathani and Mr. Muthappa for joining us. Thanks so much.
Thank you.
Have a great evening. Thank you.